Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Tuesday, June 7th, 2023. It's now 5:14 a.m. Central Time. We start off in the S&P 500 daily chart in DeMark looking back to end of December 2021. I'll zoom into the current area now. First, we'll take a look to see that price in the S&P 500 daily chart hit the upper Bollinger Band at that level. The channel 3 high is above that, and the Stark band for the upper band is right above the channel 3 high, so they're right close together. And they will continue moving up as price pushes the envelope up. The S&P 500 daily chart has printed the combo and sequential sell setup 7 count, and to indicate that for end of day today on the 7th there must be a close below 42.2102 for the price flip to the buy setup count 1. And it looks like I had my count wrong from the previous video. I was saying that to print the 8 it needs to stay above this level, and then this is the 9. So after we print the 8, if it stays above this price for today, then to complete the count sequence and get the 9 end count, price would need to be above this level, 4282.37, and that's for tomorrow on the Thursday. And price in the pre-market hours for the S&P 500 at 5:22 a.m. Central Time on the 7th is 42.84. So it looks like price is consolidating these last few days here to possibly make a push towards our target goal here, relative retracement up to at 4311.69 and possibly beyond. And to the downside is the mid band of the Stark bands, and that's a 9 simple moving average. Under there is the Ichimoku conversion line, which is a 9 EMA. Get under that, then there's the trend factor down 1 and the baseline are right together, should be good support still. And now the lower Stark band has made its way up near there, and then under there is the disqualified momentum down for 50% and the channel 3 low, which should be pretty good support if it makes it beyond these. The NASDAQ 100 NDXHILO chart shows the 5 EMA in blue back above the gold 21 and headed for the 10 EMA in red, which also took a hook towards the upside. And the rock 12 is at 2.45, so it's still possible to get yet another buy signal. Short-term KST is below 0 and its signal line at 6.69 negative. Intermediate term KST is above 0 but not exactly skyrocketing, and the long-term KST actually took a tick down here. The NASDAQ Composite NAHILO is still looking great. We've been following this basically daily, and it has no indication whatsoever of rolling over anywhere. And the spacing between the 3 moving averages, 5 EMA in blue, 10 EMA in red, 21 EMA in gold, is looking very nice. That's very nicely spaced apart. And the rock is headed into the abyss, 29.76 for the rock 12. And what that could tell you is that it has been making its way upwards very steadily and slowly, so not too many large bars or big moves on a daily basis. And that's how institutionals and commercial traders trade every day. They try to reach their goal little by little. And the short-term KST is still somewhat frozen, and the intermediate term and long-term KSTs are looking really good. The long-term is almost above zero. It's at 9.16 after crossing above its signal line under zero here. And the NASDAQ composite new highs, new lows weekly chart for the 2nd, it was last updated on June 2nd. You can see in the thumbnail that the new highs and new lows are starting to try to pull back on the stick a little bit, and that's putting the signal line ever closer to it. So one day it's just going to just pop above that signal line, and that will be the major buy signal. Till then, we live in a divergence here in the weekly chart. You can see the NASDAQ composite going up and the NASDAQ high lows headed down, so that's a bearish divergence. And the New York composite NYHILO shows that the value play is back on, as shown in the video for Monday in the NYA to SPX relative performance ratio. So this one surprised me a bit. The 5 EMA in blue went above the red 10 EMA yesterday, and the ROC 12, even though it was headed down, is within the plus or minus 5 from 0, so that's a buy signal. And this is where being a stock picker really comes in handy. So you really can't blanket the New York index. All I can tell you is that the regional banks are making a pretty good move towards the upside, and especially that started in earnest yesterday. And the short-term KST pulled back on the stick pretty hard yesterday. Is ticked up. It's still below zero at negative 28.09. KST for the intermediate term crossed above its signal line below zero, negative 126.18. That definitely needs to get above zero. And the long-term KST is quite lethargic, but planing out right underneath zero at negative 71.74. So except for this divergence between the NASDAQ composite and the high lows on the weekly basis, things are looking good. And if this doesn't get rectified before the new highs and new lows for the weekly gets above the red signal line here, so if this crosses above the signal line while this divergence is still on, that could be bad news eventually for anybody that got on board. Over here you can see how insidious it can be. Right before the COVID crash, there was a buy signal after about almost a solid year or so after going under it here. So everybody in the world jumped on board to the big fat cap, mega techs. And then the COVID crash hit and caught most of the world with their pants down. And you can see that that was in a bearish divergence at that time here. And you can see when the new highs and new lows went underneath this trend line here, dashed blue, that it really didn't make it down too far before it planed out and then eventually went back above its signal line. Now granted, this trend line that we're broken under here is a lot longer than this one. It's just the fact that it is so far under the trend line after breaking under it compared to this 2009 era, so I'm calling this even worse than back then. And getting back to the divergence arrows back here, once that bearish divergence gets started, it almost never becomes rectified. Here it did for that pre-COVID crash era. If I would have drawn the arrow here, you can see it matched up here, but that's a rare instance, and again, that caught everybody with their pants down here.